As I mentioned, money supply and credit extension numbers out. To what extent did this have a positive impact on the local currency? We're sitting at below 7 Rand to the greenback.
I actually think that, obviously the numbers were a bit mixed. Of the investment in the likes of debentures and in more derivative side of the products, anybody that's taking out loans for that side as an investment certainly dropped, specifically about 15.7%. Then on the household lending, continued to gain momentum. So from the household consumer spending side, certainly starting to pick up a little bit, seeing better banking lending, certainly seeing a little bit of relief on the debt servicing costs as we've seen interest rates drop. So those sort of things are posing a positive. I think that the Rand levels are certainly not being driven by the numbers that we're seeing today. The Rand has been more a picture of what's happening as a global backdrop.
Well, Brigid, let's quickly touch on the month-on-month decline on the private sector credit extension, 0.5% month-on-month, and on an annual rate, we saw a 5% increase. But just looking at the conflicting views that we are starting to see, is that a concern for you that on the month-on-month basis we did see a contraction?
I think that what you're seeing is investments in assets that are proper assets or paper assets, and I think that that's where you've seen the move of money, and certainly where people are prepared to take a risk. In terms of the consumer spending, you're still continuing to see confidence in consumers. You're seeing a less serious criteria coming from the banking sector. So that's creating opportunity in terms of people being able to access cash. Whether or not they'll want to be that aggressive about accessing cash in an unsure environment certainly bodes the question. And I think that at the moment, the uncertainty around the economic stance of South Africa and certainly the globe is posing some negative risks. But nonetheless, we're still seeing consumers continue to borrow. If you look at, you'll see now vehicle sales are going to come out this week. You'll see a continued growth in the vehicle sales numbers. Second-hand cars are slightly cheaper, so potentially that's somewhere that people go rather than buying a new car. But nonetheless, we are still in that purchasing sort of parameter, which is on the up and up. In other words, the PMI numbers will still be above 50, which is not in contraction, it is an expansion.
Of course, PMI is also one of the big themes on a global level this week. We had a lot of news out of China today, cementing its 5-year growth plan. It's talking about 7% growth. Also interesting to note, we had India's budget speech today, still citing food inflation and inflation as one of the big hindrances going forward. That said, we're looking at growth of 8.2% quarter on quarter for the fourth quarter. Brigid, your view about the play between growth and inflation and how the most recent numbers that have come to the fore are going to impact the inflation outlook in South Africa?
I think that that's quite an interesting question. I think there's two scenarios that are happening at the moment. You've got what's happening in Tunisia, potentially going into the Saudi Arabia region, the concerns around the political unrest that is potentially going to impact oil prices and therefore have an impact on inflation. That's driving the sort of sentiment around equity investment. What you saw last week was a massive sell-off on the equity and then a bit of comeback on Friday as you started to see talk about potential for alleviating the pressure on the shortfall in the oil. So, this whole talk around oil is quite interesting just from the perspective of where do you put your investment? Is this an inflation hedge? How do you put your, do you take a risk off or do you put risk on? And what do you deem as high risk, low risk or medium type risk? If you look at South Africa, we've seen a sell-off in our bond markets. We've seen on the flip side of that, we've seen the Rand strengthen a bit, but then we did have the Reserve Bank intervening in the Rand or keeping it supported at sort of that 710 level. That's abated, and now we've seen the Rand trade back down to better levels where there's been that vacuum sub 710 back down to sort of 695. So the interesting debacle, I think, for a lot of investors and asset managers is, in a global context, is do you look at the data, the economic data within a region, or do you look at what the impact is going to be on the likelihood of more QE? Are they going to keep interest rates on hold for longer? Or is this inflation picture going to play through? I mean, if you look at the likes of the UK and their GDP numbers, their growth is not great. The consumers are under extreme pressure. Job numbers, joblessness remains high. VAT numbers are very high, yet they're running at very uncomfortable levels with their inflation. Do they want to hike rates? I'm not sure that that's the best case scenario for now. Brigid, and this is a sort of scenario we find in South Africa as well.
Well, on that point as well, well. Let's look at the bond market in South Africa. Year to date, we're around down 7 billion rand. We were down around 12 billion a little earlier in the year. So what is the trend going to be? Because last week we also saw some selling. So is it going to be a play between selling and buying of South African bonds?
Well, I think that there's two things to consider. I mean, South African investors themselves, obviously, with this inflation outlook and the talk about whether or not we'll in fact see interest rates being hiked this year, is what is driving a lot of investment currently. So it's the talk about will we see an interest rate hike this year, and how much inflation are we going to see come through, specifically around the unrest that we're seeing in Libya and the fallout thereof, as well as the fact that the rand's also been relatively weak. So that's the first thing to consider. And the second thing, from the foreign investment side, I think that you're going to find less and less appetite, certainly not to the same degree that we saw last year, which was one of the big drivers in terms of seeing strength in the bond markets. Potentially we're going to see the bond markets selling off, and certainly the yield curve steepening quite dramatically on the back of the fact that foreigners are not that involved in our bond markets.